But I want to get your take on what's a bit of breaking news this morning. The 10-year yield topping 4% for the first time in 14 years. How do you see that shaping up the market action today?
Well, just yesterday, Neil Kashkari was talking about that there needs to be more, he didn't say pain, which is what Jerome Powell said after Jackson Hole, but certainly he said we're going to see more of the same sort of action that the Fed has already done, which is continued raising of interest rates to try to slow down inflation. And clearly the markets are not happy about that. And obviously this is something that impacts all borrowing, from credit cards to mortgages to the government itself. And the government is the largest borrower, Frank.
Yeah, one factor in the markets, the future slide this morning, was Apple's warning about flagging iPhone demand. Don't want to focus on this too much, but do you see that continue to impact the market? Obviously, Apple's such an indicator of the consumer and also a big mover and shaker when it comes to supply chain, importing a lot of things from China.
Exactly. And a lot of the demand that they would expect from China, not nearly as strong because of what's been going on with the lockdowns and so forth, Frank. So Apple is certainly a bellwether. It's my single largest holding. So I'm one of those folks who just kind of grits my teeth when I hear anything bad about Apple.
All right, I think a lot of people get nervous when you start gritting your teeth. All right, easy segue here. Let's talk about China and your options moves right now. You're watching the moves on the FXI, and you're actually seeing some bullish call buying there.
Yeah, I mean, this one has been pretty much locked for the last 10 days or so between, say, $26 and $27 per ETF. And somebody put on a really big bet yesterday, Frank, one of the biggest we've seen this year, 80,000 of the upside calls at the 28th strike in November. Now, that gives them a lot of time because that's 2 full months into the future, but it's also a sign that perhaps China, somebody believes, is getting ready to unlock and to perhaps open back up. And that would be a good thing for what you and I just discussed with Apple, but also puts a lot of demand on crude oil and a lot of the fossil fuels, because they have been pretty much shut down for most of the last 4 months, maybe even 6 months, Frank.
Yeah, definitely a factor when it comes to oil prices. All right, your second options move that you're watching is the EMB. This is an ETF, I believe, that follows emerging markets bonds. We see a lot of action in the U.S. bond market, but what are the calls that you're seeing say about at least the sentiment in the emerging market bond market?
Yeah, when you see a bond ETF down 29% year to date, which is what the EMB, that's that JP Morgan Emerging Market Bond Index you described, that is a huge move. And here they're betting that they're going to fall further still, Frank. They were buying 20,000 of the December 75 puts, with that bond trading basically at 80. So that's pretty considerable downside again from an ETF that's already down 29% year to date. So that means people are betting against some of those emerging markets and saying that, boy, the yields have to keep going up.
All right, you're also seeing some bullish call buying when it comes to CVE. You're going to have to walk me through this. CVE does both gas and natural gas. Natural gas booming. Oil's been pretty much depressed. So kind of explain this. Is this also another bet that China's going to reopen and that oil demand is going to tick up as well?
Yeah. Yesterday, we saw a bit of a turnaround in the crude oil contract, and Cenovus Energy, CVE, certainly would benefit from that. And here they're also buying big December activity at the 20 strike. It's a $15 stock, Frank, and it's down like 45% just in the last few months. As you've seen and talked about, with the turn we've seen in energy, with China basically backing off and in the recession fears certainly as high or going higher than any we've seen in recent history. This is one of those reasons that we've seen a fall off in demand for crude oil. But obviously going into the winter and with China reopening, I think oil and gas plays are pretty tasty at this level. This would be one of the areas of the economy I'd really go into in a bigger way right now.